Mortgage Mark here. Let's talk about mortgage insurance for conventional loans or conforming loans, the Fannie Mae, the Freddie Mac type programs. Let's talk about kind of the different options you have and what's better, what's best. The truth be told, there is no better or best. It's just what's right for you as a specific instance or scenario. So guys, monthly MI is the most common. That's the one that's part of your monthly payment. Technically, it's known as annual, but divided by 12. The commoner, the layman, knows it as monthly MI. So the monthly MI is what everybody knows. It's what can eventually go away. Check out those details on how to cancel or remove that MI. As far as the next two, they're kind of one and the same. So imagine instead of paying that monthly piece, depending on the down payment, the more you put down, the less expensive it gets. But if somebody were to say, hey, I don't want to pay MI, but I only have 10% to put down. Well, guess what, guys? They can buy out the MI with a single paid premium. So single paid means, hey, I'm going to take a lump sum, and the mortgage insurance companies determine how much, by the way, but they'll say, hey, if you prepay, make up a number, 3, maybe 4 years of that MI at closing, we'll give you this loan without any mortgage insurance. So you're paying it up front, in other words. Lender paid MI, very similar in the sense that that big number still exists. The only difference is you as a homeowner or a mortgage borrower, you won't have to pay it. The lender pays it. Well, guess what, guys? When we pay it as a mortgage lender, we're going to ultimately just roll it into your rate. So instead of taking a rate of X, it's X plus something. Is that a bad thing? There are scenarios where that does make sense. A lot of times tax deductibility comes in from mortgage interest versus mortgage insurance. So we'll be happy to give you more information on that. Lastly, there's what's known as split premiums. So a split just means you pay a little bit up front and then a little less monthly. It's probably the least used of all these options I just mentioned, but it does exist. So if somebody says, hey, I need a monthly payment of X, I don't have the money to get rid of that MI entirely, they can prepay some at closing and it takes that monthly payment down a little bit. Which one's right for you guys? Again, to be determined. Let's have that conversation and see which one is right. And again, a lot of times it has to do with both cash at hand, how much you're putting down, and then maybe the potential increase in value if you're doing home improvements or things of that nature. So call us. We'll walk you through all those options. Talk to you soon.